Hey guys, what's up? Alec back with the daily stock market, and look at that. We have several stocks that were up on Friday. We're going to be talking about a slew of different stocks in this video, so make sure you stay to the end because I know a lot of you guys like my videos because I talk about a variety of a lot of different stocks. So this video is going to be rapid fire through a bunch of different stocks, and then throughout the week later on, we'll dive a little bit deeper into different stocks and the reasonings behind them and everything great like that. So the first stock on this list is going to be Meta Platforms, Facebook. And what do we see from Facebook here? We see a lot of consolidation all the way from October. All right, the price has only moved around 2% or 1% in the last, what is that, almost 4 months now. All right, so that's interesting to think about. A lot of consolidation. Is it going to go back up? Is it going to go back down? And in that consolidation period in December, we saw Meta all the way down to $300 per share, which if you're a long-term investor, I wouldn't pass up anything close to $300 per share or under $300 per share for long-term holders. We also see the Quest 2 actually sold more than the Xbox did this holiday season, and the price actually went down from December. So the price hasn't even reflected from the amount of Quest 2s actually sold. So once people realize how strong of a grip Facebook already has on the VR community. Here we see Sean from Rec Room actually saying the numbers were very exciting. We've seen over 1 million VR players log into Rec Room since Christmas Day, and it took us about 60 hours to hit that number. And here you can see Oculus was the #1 most downloaded platform on the App Store on Christmas Day, and you can see a huge spike on Christmas Day. Most of those people were actually buying Quest 2. So once the numbers actually reflect and they do their earnings statements and they realize how much of their revenue is actually coming from headsets, it's going to be a very interesting concept. It's going to be very interesting because if you look at any other metaverse related stock, the stock price has exploded, and Facebook stock price hasn't represented that at all in the slightest. So once people realize how tightly Facebook is tied to the metaverse and virtual reality, I think reality will set in eventually, and the stock price will go above $400, $500 in the next 1 to 2 years. These are just all my own opinions. So the next stock we're going to be talking about is a fan favorite, AMC. And right now it might not be a fan favorite because it's down 19%. And it was showing some strong support right at $30 per share, $29 per share. A lot of people were buying thinking that 28 was the bottom, and it just dipped down to $20 per share. So a lot of people are in the red right now. And I have some good news and some bad news. We see more recent supports right around $14 per share. But if we go to earlier in the year, we see a support right at $19.90. And we actually haven't passed that support yet, is the silver lining. If we go to a 5-year support, we can also see that the support again is right around $20 per share, what we have right now. So it seems as if this is the bottom, but Monday and throughout the rest of the week will tell strongly. A lot of people are going to make a lot of money with AMC, and a lot of people are going to lose a lot of money with AMC in the next 1 to 2 weeks. All right. A lot of people are going to be doing puts, thinking that it's going to be going back up to $50 per share. A lot of people are going to be doing calls, thinking that it's going to be going back up to $50, $40 per share. And a lot of people are going to be doing puts, thinking it's going to go closer to $10 per share. Comment below what you think is going to happen. I mean, obviously, if you can kind of see the pattern that it's been doing lately, it has been doing a downtrend, okay, which is, some bad news overall. And it seems like it's following this downtrend pattern. So it's going to actually have to break out of this support, this top yellow line here, and go into new all-time highs. And it's honestly probably going to have to go into that $40 to $50 range to actually buck this downward trend that we are currently seeing with AMC. So personally, I'm staying away from it. It's too risky for me with the downward trend that's forming right now. However, with that being said, it could be at the bottom of the downward trend, and it could at least get to that top support, I think it could at least bounce back to $30 per share. So if you're someone that's buying under 20 and trying to sell above 30, that could be a pretty good strategy. Obviously, it's not guaranteed, and anything can happen at the end of the day. So that leads us into the next stock that we got to talk about. And let's go a little bit quicker because I want to talk about a few more different stocks here, which is going to be Gamestop, which it seems like that it's not in a downward trend. It was actually in an upward trend until recently. It broke that trend, and right now it's heading downward. So if you're currently in GameStop, it was supposed to keep heading up or at least back down once it hit that support right there. Okay, with that being said, it's not following the trend anymore. It's not following the upward trend that it was making. With that being said, there is really no support at this point. It seems as if it is in a free fall mode. We've seen some supports around 120 that it fell below. We see some supports next around $65 per share. Am I saying it can go to $65 per share? I'm not saying that, but it definitely could. And we also see a small support right around $92 per share. So between 92 and 65 is possible. If you want to minimize your risk, that's always a good strategy. For example, if you have like $1,000 in GameStop, you can always sell $300, $500, minimize your risk, and hold the rest, because if you look at the pattern that it's been showing in the last year, basically, it's been popping back up every single time it goes down. You see these pop back up trends here, and with these trends being located right here, right here, right here, we know that it's just a matter of time before we see another trend pop back up with GameStop. So if you are a buyer and you want to play the more defensive side, buying between 65, maybe some at around 90, could be a good strategy to sell around 150. I think GameStop around 150 or higher will definitely happen once again. However, those are some of the most risky forms of investing in the stock market. AMC and GameStop's pretty much a gamble at that point, so you have to be willing to risk money. So that leads us into some safer stocks. So I told you we're going to get a variety of stocks in this video, which is going to be PayPal is next up. And we can see a consolidation right here, which is pretty much over the last month and a half, is this consolidation. So with that being said, I think once we consolidate and start heading up, we haven't had a really upward trajectory yet. As you can see, my average cost is $191 per share. This is mainly for long term, so I'm not sad, or mad that I'm down $180. It's not a big deal for me because I know PayPal intrinsic value is probably closer to $250 to $270 per share at this current moment. And a year from now, their intrinsic value will probably be closer to $300 per share or higher. So I have 14 shares for right now, but the intrinsic value a year from now could be $4,000 or even $5,000 a year or two from now, which I plan to hold PayPal for a while. We see a lot of consolidation in the past, right around $180, $200 per share, and as low as $176 per share. So in my opinion, $175 per share is pretty much the bottom for long-term investors. However, if it does go below $170 per share, I'll love to be loading up some more shares, because right now you can see that it's only 2.7% of my portfolio diversity, and I probably want PayPal closer to 5% of my portfolio diversity. Now, I hold around 5,000 extra PayPal shares in one of my larger accounts for long term, which is on Fidelity, M1 Finance, and Webull. After PayPal, I have a similar position size in Disney between all my accounts, my M1, my Fidelity, my Webull. On Robinhood, I only have around $1,300, 8 shares, and my average cost is $155, which I think is a good average cost for long term. However, right now it seems as if it could be downtrending, but if we look a little bit more carefully, Disney is still in the uptrend mode right now. So we'll draw a line right there, and then we'll draw a line right there, and you can see that it's preparing to bounce. So for short-term traders, you could be looking at a short-term option up for Disney up to around $150 to $175 per share. I think it's a pretty safe bet for Disney. Long term, I think Disney is going to be getting back to $170 per share and 180 to 190, in my opinion, is a fair intrinsic value for Disney, considering the growth they've been having with Disney Plus. Plus, they've been launching NFTs and the metaverse. I think Disney has some great stuff to come in the future. In the next 5 years, I definitely want to be a holder for Disney, and I'm not looking to sell any of my shares anytime soon. That leads us back to the more riskier stocks like Tesla, back at $1,000 per share, consolidating, not really moving much. You know, it's been stuck at this $1,000 per share for a while now, since October. However, it has had some highs of 1,200 and some lows of around 900 to $899 per share. And by the way, if you guys like these old school rapid fire videos where we talk about a few different stocks, more than 3 to 5 different stocks in one video, drop a thumbs up and comment below for more content just like this. However, if we look at the 1 year mark with Tesla, we see them as low as 563. Remember, a lot of different growth companies are at 52-week lows right now, so it wouldn't be out of the question for Tesla to drop to a 52-week low. However, you know, with all the growth they've been having, the perfect numbers they've been releasing, they're one of the favorite stocks by analysts and consumers and retail investors. I think Tesla is going to be staying above $1,000 per share for a while, with some quick dips down to like 800, 900, maybe even $700 per share very quickly. So if we see those quick dips, make sure you capitalize on them, because typically Tesla does rebound very quickly, and I think it will continue to develop into one of the largest companies in the world in the next 5 to 10 years. So if you are a long-term investor and a long-term holder, this is definitely a stock to be looking into. And here you can see my personal position. Here you can see we have $1,500, around $1,500, $1,650 to be exact. All right, my average cost is around $1,000 in Tesla, so anytime it goes below that, I'll be buying a little bit more. However, you can see I have a reoccurring buy on Tesla, $20 every single day. And since I've started that, we're up 59% on that averaging in of Tesla. Okay, so with that being said, we have a $1 trillion market cap, 33 PE ratio, which is like, what is that, 2 to 3 times the PE ratio of Disney, by the way. Let's not dive in too deep. Let's move on to the next stock. We have DraftKings down 4% on Friday, down 13% on the week, down 21% in the month, and 51% in the last 3 months. We have the football playoffs happening now. Right now, the football playoffs are happening, and we see that here it's just a downtrend. Okay, all we see from DraftKings is a downtrend, and people are wondering, when is it going to end? When is DraftKings going to buck the trend and start that huge upward momentum and that upward rally that DraftKings is known for? All right, so we see big dips from DraftKings historically. We see big rises from DraftKings historically. I think as hype builds up around football season, we're going to see DraftKings continue to go up. And the Super Bowl, all right, is coming up in just a few weeks. Personally looking to at least sell DraftKings around $40 per share, and I'm looking to sell most of my DraftKings around $50 per share. So if you've been holding out for DraftKings and you've been looking to get in, I think now is a pretty good time. Of course, that's just my own personal opinion to get into DraftKings. Even for long-term investors, I think they're going to be continuing to be a leader in that sector for years to come. And the last one we're going to talk about is an ETF, and it's an ARK ETF, which is going to be Cathie Wood's. All right, this is Cathie Wood's ETF, down 17% in the last month, down 30% in the past 3 months, and 45% in the past year. This is one to start aping into for long term. I'm trying to get on my hands as many shares as possible in my long term specific account. This is, when I say long term for this one specifically, I'm talking about 3 to 5 years. I won't touch these shares for. All right, she knows what she's doing, but she needs a long scale. All right, 1 year, 2 years, probably not enough for Kathy Woods. She needs like a 3 to 5 year horizon, and she's gonna be dominating. Now, with that being said, I'm not loading the boat at $80 per share because it could go down a little bit more to 65 or 50. So I think between $50 and $65 per share for ARK ETF is a perfect place to start buying into for long-term investors. And you can easily see 3, 5x, even 10x growth if you get in at $50 or $60 per share and you hold for 3 to 5 years. I hope you guys like the variety of different stocks that we talked about in this video. Smash a thumbs up if you did. We're at 149,000 followers on Instagram, so make sure you press that follow button if you're not following on Instagram yet. That means the world, and thank you guys so much for all the support. Whoever comments on every single video, and just whoever likes the videos. And as long as you're just watching the videos in general, I appreciate that. And I'll keep making these videos for you guys as long as you keep watching these videos and smashing the thumbs up button and commenting below. All right, guys, make sure you check out my crypto page yet if you haven't. It's a lot of crypto alpha. We talk about the best coins that can 10x, the best NFT projects that are new to mint. So slap a follow there, share this video with a friend, hit the like button, subscribe on YouTube with the post notifications on so you're alerted anytime I drop a new video about the stock market. All right, guys, I'll see you in the next video. Remember, don't time the market, buy the market. Peace.